Hello and welcome. This is John CATO from 30-Minute Trading, and this is a follow-up to the trading webinars that I've been running and the one-to-one sessions I've been doing with you. As you know, I've just implemented the CATO indicators into MT4, and this is the first introduction into how to use it, but you may find it useful. I'm glad that you've actually installed the software, and I look forward to helping you. You can contact me at any time and I'll be only too happy to help. You must use proper trade management, you must use proper money management, and I have delivered to you software to help you do that. You must make sure you take proper care and attention, and in the early days make sure that you take snapshots of every single trade and discuss them with me as soon as you've done so, or as soon as you have any questions about any of the trades you've made. Make sure that before you get used to any tool, you get used to it in trial mode. So it's pilot mode. That means you use demo trading to start with before you go live trading. Make sure you do that. You can lose a lot of money while you're getting used to the tools on anything. It doesn't matter whether you're doing carpentry and trying to figure out how to use a spoke shave, or whether you're learning how to become a mechanic. You actually have to do some testing. You cannot expect to become an expert at trading within an hour or 2 hours or 2 days or 4 days. It takes time at the wheel. So as Malcolm Gladwell said really in his book, it takes 10,000 hours. Now that sounds like a huge amount, and I'm hoping to give you some leverage on those 10,000 hours. Here we are anyway, keys to trading, MT4 and the CATO indicators. First, a disclaimer. Trading stocks, foreign exchange, commodities, indices or other financial assets online carries a high level of risk. Trading on margin carries an even higher level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to trade, you should carefully consider your investment objectives, level of experience and risk appetite. No information or opinion contained on this site or in this webinar or in this video should be taken as a solicitation or offer to buy or sell any currency, equity or other financial instruments or services. Past performance is no indication or guarantee of future performance. Disclaimer: CFTC Rule 4.41 results based on simulated or hypothetical performance results have certain inherent limitations. Unlike the results shown in an actual performance record, these results do not represent actual trading. Also, because these trades have not actually been executed, these trades results may have under or overcompensated for any impact, if any, of certain market factors such as lack of liquidity. Simulated or hypothetical trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those being shown. Right, be careful out there. Trading is a tricky business and you have to pay good attention. Those who've been on my webinars will understand this a lot more, and I hope I'm able to help you with it. Right, let's talk to you about MT4 and the CATO indicators. Okay then, this is how it works. I've set you up with a profile, which is the 30-minute trading profile window. This is the overview window. In the overview, we have 8 particular Forex pairs. They're selected because they tend to have the tighter spreads, and they tend to be the ones that are most worthy of looking at in the first instance. The first thing I want to talk to you about is why they're laid out the way they are laid out. First, we have Aussie dollar, and then we have euro dollar, and then we have pound dollar. This will give you an idea about how the dollar is performing. So in this example here, you can see that the chart on the 4-hour chart, which is over the period of the last couple of days basically, is moving sideways on the Aussie dollar. If you want to know a bit more about the actual things, you can look down here and you can see the symbols there. So that's the S trader, which is often the first thing to move, the M trader, which is often the second thing to move, not always, sometimes it goes the other way around, and then the litmus test here, and then the bull bear butterfly indicator. Now I'll take you through each one of those and we can see what they are. Okay, so S trader, when it is negative, it is bearish. It means that from the point of view of the S trader indicator, we are bearish. M trader, from the point of view of the M trader indicator, we are bearish. Litmus test can be either -1 or -2, or +1 or +2. -1 is equivalent to butterfly, but with a butterfly in the direction of the symbol, so that a -1 would be a negative bearish butterfly. -2 is showing much more commitment to a bearish move. The bull bear butterfly indicator itself can go down to -14.75, which is fully bear, or +14.75, which is fully bull. And typically you want to trade when the indicator is, if you're trading trends anyway, you want to be trading it so that you're trading when the indicator is above 6 or 6.5 bullish, or below 6 or 6.5 bearish. When it's fully bull or fully bear, it can be overextended, and you might want to wait for a pullback from fully bull or fully bear before you take a trade entry in the same direction as a continuation trade. This is where your own trading skills come to play, and you will have to make decisions about that. We've done many webinars, and I've covered much ground over this, and I refer you to many of those webinars. You can always call me or talk to me, and I will help you out with it anytime. Right, let's take each one of these in turn then. Aussie dollar, we're saying sideways. Euro dollar, you can see, is trending slightly upwards, and if we move the cursor over here, you can now see that the S trader is reading 1, the M trader is reading 1, the litmus test is reading 2, and the CATO bull bear butterfly indicator is reading 12.5. That is all a bullish trend, and since it's a bullish trend, we might want to confirm whether or not the same thing is happening on the pound dollar. We know the Aussie dollar is tending towards sideways, and we'll get a reading on that in a minute. But let's have a look. Let's actually go and read that now. This one here, we're getting a +1 on the S trader, a +1 on the M trader, and a -2 on the litmus test, and a -14.75 on the bull bear indicator. That is bearish. So we have conflict. We have some indicators saying bull, some indicators saying bear. This may be a perfect reversal trade, but at the moment it's not consistent. So unless you're feeling confident, you might like to give that trade a miss and wait for something which is more consistent, such as the euro dollar. Right, let's have a look at the pound dollar. The pound dollar is on this particular candle here at the moment, moused over that. The S trader is positive, the M trader is negative, the litmus test is positive, and the bull bear indicator is positive. So we may be looking for a trade to the upside, but at the moment M trader is going short. At the current time, if you always look at the previous candle to take true determination about what's happening, then the previous candle, if we move across, M trader is positive. So what that is saying, that if we get a trade long above that candle, you might be interested in a trade to the upside. Of course, you may choose to take your entry points off a different time scale. So for example, on the pound dollar here, we're looking at the 4-hour time scale. As a trader, you may choose to look at a tinier time scale than that. You may go down to a 1 hour, or a 30-minute, or a 15-minute, or even a 5-minute. And this is your own trading decision. Clearly, the pound dollar is in an uptrend at this time, and it's showing a pullback on the M trader, so it might provide a perfect entry point. Let's have a look at the pound dollar anyway and see what more detail we can find in it. First, we'll expand this window here, and we can see now this window of the pound dollar on the 4-hour chart. Okay, so taking the 4-hour chart, you can see how we might have traded this had we been trading it. Let's look at the recent past. The recent past shows here we've got S trader just coming from negative to positive. So that's from below the line to above the line. When we come across from below the line to above the line, we've got a signal that the momentum from bearish to bullish has changed on S trader. Currently, we've got the M trader pushing down bearish on that particular candle, so we have conflict. However, S trader often leads the way. Let's look back in time. Here's S trader moving up, leading the way, and if we look at the candle above here, that was a perfect entry for a move to the upside, and you can see how that would have turned out. So just checking that you can see that clearly. This is a move up on S trader. This is the candle, it clicked up on S trader. M trader was still in the bear zone. Litmus test was actually still in the bear zone, but the bull bear butterfly indicator here was reading 13.25, so very bullish. So as a trader, you may have said, well, S trader might lead the way. We're very bullish on the bull bear butterfly indicator. That means we're highly probable to be going long. So despite the fact that M trader and litmus test is currently showing bear, we might be interested in that trade. Sure enough, on the next candle, next 4-hour candle, M trader flipped into positive, and so did litmus test. So this one here provided everything in alignment. Now if you're being prudent, you wait for everything in alignment and you take the trade if it breaks above the upside at the top of that candle, which it actually did on this candle here, which was later on the 26th of November 2013 at 1600. That would have been your entry, and you got in the trade there, then you'd have hovered for a while, and then we'd have another big move up here. So your trade would have taken the trade up to here, and this point here, notice S trader kicks a low. S trader is now warning that we might be pulling back, and M trader is warning we're pulling back here. Now, depending on your trading decisions, your own personal trading style, you may put a stop underneath the S trader pullback, or you may wait for the M trader pullback to kick you into the stop position. If that was true, then you would end up with a stop underneath there, which would be here, and you'd stay in the trade and you'd be continuing. The other way of looking at it is you may have taken the money off the table at this point, and S trader is kicking you along here, so you're back in long again as it breaks out above there, and now you're trading it long again on S trader as M trader kicks around and pulls you long as well. So that's looking at how the indicators work and how they can work for you. And then the next question is, as we've discussed on the training courses and webinars and so on, is about how to trade it. And that's the reason why I have ATR 9 down at the very bottom here. ATR 9 at this point here, where we first get S trader kicking us a buy hint. These trades are not guaranteed, okay? You can't forecast what the market will do. You only can look at trading the probabilities of what the market will do. And this is what this code, CATO trading alerts, give you the indications of the probabilities of a trade in your favor, especially when everything is in alignment. Okay, let's get back to the ATR 9. And ATR 9 on that candle is reading 0025. And what I find looking at this is one way of trading this is with multiple tranches. If you're trading it with multiple tranches, you may trade it with 3 tranches. And if you were trading it with 3 tranches, my suggestion would be to trade it so that those 3 tranches are entered on the same entry, particularly when everything is fully in alignment, and you trade it according to your trade plan with your stop below the candle that caused the entry. So that means that if it reverts, the whole of the candle that triggered the alert long is covered again the other way, so that's engulfed in the opposite direction. And then you will be looking to close the long. The other way of looking at a stop is to put the close of the stop 1 ATR away from your entry point. And there we have the ATR 9, which is the particular time 0.0025 in this particular unit scale. Okay. If you're looking for the 3 tranches long, then you're entering long. You're looking to take 1 tranche off the table as soon as it gets to 1 ATR. At that point, you will bank 1 ATR of 1 tranche, and the remaining 2 tranches will then be running. Those remaining 2 tranches, you move your stop to break even. Now, it may be that it pulls back and stops out at break even before it goes on up, and that's just trader's life. But if it doesn't and it continues to go, you take your second tranche off at 2 ATR. Once you've got 2 ATR, because price action often moves in waves, that might be all you're going to get out of a trade. And of course, your third tranche, the stop is moved to 1 ATR. And if it pulls back, you end up with 2 tranches at 1 ATR and 1 tranche at 2 ATRs. So that would be your target. However, if the trade continues to go in your direction, the third tranche is left to run and rise as it would have done in this particular case. You would have got the third tranche moving, and you'd have banked 1 tranche at 1 ATR, 1 tranche at 2 ATR, and the third tranche would have continued to run. That's where it comes down to you again. Let's move forward to here to decide whether you're going to take it off the table at that point here. And one decision you might make on that is based on the S-Trader. The other decision you might take on that is based on the fact that that's the low and that's the high, and providing it doesn't pull back beyond the 50% retracement or the 61.8% retracement, you may say that there's still potential for the trade to rise, which in this case it did. This is an individual trader's trading decision, and it's up to you how you trade that, how to use the CATO, bull, bear, butterfly, trader alerts, the S-Trader, the M-Trader, and the litmus test in trading as to decide the fine details of how you use it. This does not take away your responsibility as a trader to trade. It doesn't make any guarantees of what will happen in the future, because the future is not ours to predict. It only gives you the probabilities that this trade may now go in your direction and may deliver you some positive results in your trade. I hope that helps explain how to use these indicators, and I'll be very, very happy to talk to you at any time about how to use them. And that was a very, very quick driving lesson on how to use the CATO bull, bear, butterfly indicators and the various trader alerts here, the S-Trader, the M-Trader, the litmus test, and how to place your trade entries and trade orders. Wishing you well and wishing you happy trading. This is John CATO, 30-Minute Trading. Thank you very much. Goodbye.